own a bank that shows me what I spend instantly.
We're Monzo. Give us a go. See?
Well, I want a bank that can help me budget for the things I need, like a new leather jacket for Bingo.
We can do that.
Bingo's my cockapoo.
Hi, Bingo.
It's a real faff to sign up.
It takes less than 10 minutes.
Race you.
You're on. Time's up. How'd you get on?
It's a draw.
Is it? We hear you, Bingo. You make Monzo Monzo.
Term, JP Morgan downgraded shares of Peloton to neutral from overweight. Demand for Peloton's home workout equipment took a hit after pandemic restrictions were lifted. Peloton reported earnings that beat estimates. That triggered yesterday's rally. Shares are today about 9% higher. Meta has reportedly canceled its high-end mixed reality headset. The information quotes two unnamed sources at Meta who say the company pulled the plug on the device this week. Shares of Meta now down 0.7%. Those are some of the company stories we're following for you at this hour. I'm Amy Morris, and this is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio and Television.
It is Bloomberg Business Week. A quick headline: you may have heard us say that the Associated Press reporting that RFK has thrown his support behind Republican nominee Donald Trump. Well, now a Kennedy aide has come out and said that RFK Jr. has not endorsed Trump, and the Kennedy aide says that a court filing was not reviewed by the campaign. We'll continue to bring you headlines as we do get them. It's time now for Options Insight with Bloomberg News Chief Markets Correspondent Abigail Doolittle. She's joined by Eric Dugan, founder of 3D Capital Management. Hey, Abigail.
Hey, Tim. Thanks so much. And Eric, great to see you. It's been some while since we've chatted. And of course, you folks focus solely on S&P 500 E-mini futures, but to do so well, you're certainly thinking about volatility, and I know that you're one of the people who introduced me to the idea of the global relay race among markets. So right now after Powell, what really stands out to me the most is the fact that we have the dollar-yen down 1.4%, really close to its last low. Do you think that we're going to see a continuation of the yen carry trade unwind?
I do. It's ironic. You're seeing the S&P rally today. I think that move today in dollar yen could be telling us something for next week in the S&P 500 and volatility.
So you study history, of course, and you're always talking to me about prior times as you're lining up your various signals. What point in history, if any, does this particular moment remind you of, and will the result be the same?
Well, maybe not dollar yen specifically, but the DAX and the S&P 50-day correlation went negative July 1st. The last time that happened was back in 2018, and that resulted in a 10% correction in the S&P, multiple 10 and 20% moves in the S&P. So certainly the DAX and the S&P, the Nikkei is also a bellwether for the S&P. So I would watch the Nikkei. Continue to watch the Nikkei, specifically next week. We should come under pressure next week, and the Nikkei would be the first thing that I'd watch. Yeah, that chart technically looks extremely fragile, to say the least. Now, just going back to the S&P 500 mini futures, and of course, all of this is just talking about tremendous amount of volatility for the index's next big directional move, up or down. And I would say I'm thinking about more than 10% at this point. Do you think it's going to be up, or do you think it's going to be down? And if you could talk about timing. Well, Abigail, I think you know me well enough that we take it one day at a time. There are certainly signs out there right now that are telling us the next move is down. We're now making a lower high. We came within about 1.5% of an all-time high. So next week is going to be important. You know, the VIX and the S&P are also now rallying and up on the week. This week, that also happened back in July. We saw the S&P making new all-time highs. We saw the VIX rallying, and then we saw obviously the S&P dropped about 8%. So right now, everything is telling us, and what we're looking at, dollar yen, VIX, S&P, that the next move is down in the S&P. That doesn't mean, however, that we won't rally, though. Look at today.
Yeah, in between rallies, I would agree. The different charts look a little bit tenuous, to say the least. Eric Dugan, founder of 3D Capital Management, thanks so much for joining us for Options Insight. Tim, Jess, back to you.
Yeah, it's Abigail Doolittle, a Bloomberg News chief markets correspondent, there with Eric Dugan, the founder of 3D Capital Management. Well, if you are sticking with us, we're going to be on radio. We got a great program coming up because we're going to hear more from Jackson Hole. We got Michael McKee joining us. Plus, we got former Kansas City Fed President Esther George live from Jackson Hole as well. Plus, we're joined by the CEO of the publicly held Bitcoin mining company CleanSpark. That's all ahead in the next 2 hours on Bloomberg Business Week on Bloomberg Radio, YouTube, and Bloomberg Originals. If you're sticking with us on Bloomberg Television, The Close with Alex and Scarlett is up next. This is Bloomberg.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
It is Bloomberg Business Week. We are 1 hour away from the closing bell, live from the Bloomberg Interactive Brokers studio. We're streaming on YouTube and Bloomberg Originals. I'm Tim Stenevec, along with my co-host for the afternoon, Jess Metton. She's a deputy team leader for equities here in the U.S. Jess, how are you?
It's so great to be here this afternoon, especially on the day we were all waiting for, Jackson Hole. And I feel like we heard more from Powell than a lot of traders were betting on into this. So it's going to be interesting how things shake out the next couple of weeks because, as you know, the summer doldrum's still going on. But NVIDIA earnings next week.
Yeah,
so don't
the
forget
28th.
that. That's right, next Wednesday.
Okay, we're going to talk about all that. By the way, I think Carol Masser, who you're filling in for today, might have a little FOMO that she's missing Jackson Hole.
I know.
And Mike McKee and his cowboy vest. Who
You know what? Hopefully he puts that cowboy hat back on.
Yeah, I don't know if he can hear us. He's saying, get me the cowboy hat.
I think that's what he's
him
saying
now.
right now.
Hey, speaking of Mike McKee, he's going to be interviewing former Kansas City Fed President Esther George live from Jackson Hole. We're going to have that interview in just about an hour. Plus, we're also going to hear from the president and CEO of the publicly held Bitcoin mining company CleanSpark a little later.
That's so important, too. And, of course, we also have Louis Navellier on markets, so he can talk all things, especially with the positioning moving forward, Tim.
And it's Friday, so that means why not have a little bit of wine? We got Travis Braithwaite, the founder of Pangea Estates, on bringing together wineries around the globe.
I can't wait.
Yeah,
this is my favorite segment of the afternoon,
well,
beyond Jackson Hole, of course.
It's not for 90 minutes, Jess, so hold your horses a little bit,
right.
okay? All that and more coming up over the next 2 hours. First up, a check on the day's trade and top business stories. Here's Amy Morris in for Charlie Pellet.
Hi, thank you, Tim. Stocks climbed, bond yields tumbled after the Fed Chair, Jay Powell, reinforced expectations that the central bank will slash interest rates in September while leaving the door open for even more cuts.
The time has come for policy to adjust. The direction of travel is clear, and the timing and pace of rate cuts will depend on incoming data, the evolving outlook, and the balance of risks.
Fed Chair Jay Powell, and we check markets for you all day long here at Bloomberg. The S&P 500 up 0.8%, or 45 points. NASDAQ up 187 points, that's about 1%. And the Dow is up about 0.9%, or 357 points. The 10-year Treasury yield at 3.8%, and the 2-year at 3.91%. Also, new home sales for July bounced back to their highest level since May of 2023. Buyers taking advantage of lower mortgage rates and more listings to choose from. Contract signings on new single-family homes increased 10.6% last month to a 739,000 annual rate. Government data showing us this early this morning. The pace beating all estimates in a Bloomberg survey of economists. And economists surveyed by Bloomberg anticipate a sharper slowdown in the U.S. labor market. They see the unemployment rate peaking at 4.4% by the end of this year and staying there through mid-2025. That is a Bloomberg Business Flash. Now back to Bloomberg Business Week.
Loving the music here, right, Tim? And so, of course, we've been talking about this all afternoon, as you all know. Fed Chair Jay Powell finally laying out what Wall Street has been expecting for a while here to cut interest rates that are coming soon to help support the economy. That marks an about face after the Fed, of course, began hiking rates back in March of 2022 after inflation, of course, spiraled to its worst levels in a generation. The economy and the U.S. stock market, though, have both come a long way since then. So let's dive into the economic as well as the investor outlook following Powell's speech at Jackson Hole this morning. Who better than to bring in then Bloomberg's own Mike McKee, international economics and policy correspondent at Bloomberg News. And he's actually at the Jackson Hole Economic Policy Symposium here. And then, of course, Tracy Bell, Chief Investment Officer at First Horizon Advisors, joining us on Zoom from Birmingham, Alabama. Mike, I'll start off with you because you just in the last hour had that great interview with Austin Goolsbee once again, and I thought it was really interesting when he laid out sort of when people were debating about the 25 basis points versus 50 basis points in September, but he said expect multiple cuts for this year and next. So what was kind of your big takeaways from your conversation with him?
Well, we've turned a corner now. We're now out of the higher for longer regime, and we are in the rate cutting cycle. The question will be, how far do they cut? They don't have an answer for that because they don't exactly know what the neutral rate is going to be. The economy growing above potential in recent years, does it stay that way or does it fall back? Can they lower interest rates below or at least to where they were even before the great financial crisis, what they might have considered normal? And they don't know whether they're going to cut 25 or 50 basis points. Their preference is 25. But if we got some really bad economic data, they might do 50. And that's what Austin Goolsbee said as well, without taking a position on what they'll do in September.
All right, well, maybe we can get Tracy Bell to take a position. She's Chief Investment Officer at First Horizon Advisors. Tracy, come on in here and tell us how you're viewing the rate path, at least through the end of the year, given what we heard from Jay Powell and the various Fed speakers we've heard from live from Jackson Hole.
Yeah, I love your intro music there. Time, that's what as Chairman Powell said today.
There's a method to the madness here.
Exactly, on a Friday afternoon. So, yeah, the time has come. And, you know, I think the data support that. And what Mike is saying about a slow and deliberate pace is probably what investors should expect here. Investors have been trying to price in Fed rate cuts since the beginning of the year. And we've really just now gotten to the point where the Fed is comfortable doing that. Chairman Powell talked about gaining confidence in the data, continuing to move towards the Fed's 2% inflation target, but at the same time acknowledging that the employment market has definitely cooled. And we see that in the data. So to the extent that the data continues to support that, we should expect rate cuts to follow.
So I want to follow up with you, Tracy, on that, because how are you advising clients to position at this inflection point with the Fed and a change in monetary policy? What are you telling them to buy? What are you telling them to sell?
Well, one of the things that we talk about a lot with our individual clients is expectations around transitions. So when the Fed was raising interest rates to begin this part of this cycle, we talked about transitions being difficult and understanding that transitions can lead to heightened volatility. We saw that not that long ago, a couple of weeks ago, with the Japanese market selling off and the U.S. market following, only for things to turn around and bounce right back. So we're in that same type transition environment where the data is beginning to transition to a lower pace with economic growth and a little bit weaker on the employment market, and inflation is coming down where it needs to be. And that implies that we're in another transitory environment. Excuse the use of the word transitory, but transitory where we're shifting down a little bit in the growth rate. And that means that investors may have to endure a little more volatility as data continues to come out, and it's going to be lumpy. Things don't move in a straight line, and we're suggesting that investors be prepared for that. It's not time to change what you're doing. Your investment should be mirroring what your longer-term financial goals are for the average individual investor, and just understand that in a transitory environment, you may experience some volatility.
Mike, come on in here because I want to talk a little bit about this line that I mentioned in our interview with Ira and Stuart a little earlier from Powell's roughly 16-minute speech a little earlier today. Here's what he said, quote, the upside risks to inflation have diminished and the downside risks to employment have increased. In other words, they're more concerned with the risk to a rise in unemployment than they are to a rise in inflation. At least that's my takeaway. How did you view those two lines?
Well, you got it right, Tim. The Fed has been worried about inflation. It was their number one priority for 2-3 years now. But the balance of risks, as they put it, has now tilted towards unemployment rising too much. The Fed chair said that they don't think at this point that the labor market is going to produce wage inflation that would worry them. But they are concerned that unemployment could rise too much. Now, the question is, unemployment having risen to 4.3%, is that because companies are laying off workers? It doesn't appear to be that way. It appears to be a much larger labor force, more people out looking for jobs. And if that's the case, the Fed isn't going to be worried, but they'll be watching the data closely to make sure that we're not seeing widespread layoffs, which would be a sign of an impending recession.
Is that, Mike, the piece of data that they're most concerned about now moving forward?
It does appear that way. They anticipate that they're going to see inflation continue to come down toward 2%. It might be bumpy, could be goes up 1/10 in a month or something like that. But they don't seem to think there's a possibility of a breakout at this time. But they are worried about a breakout of unemployment. And Powell did say today that they'll do whatever it takes to keep that from happening.
Hey, Mike, you also, I'm sure, heard about this since you're out there, that Raphael Bostic as well as Patrick Harker were both signaling that they see the longer-term neutral rate around 3%, which was pretty specific for both of them to come out and say that. So does that mean we should expect over 200 basis points worth of cuts over the next potentially year or so?
Well, a single data point doesn't make a trend, nor do two, but if we get some more, we might think of that. I think probably the best answer is the one Austin Goolsbee gave me, which was we're going to have to wait and see, because we're going to have to wait and see exactly what the economy does. If the economy starts to slow, then you would see more rate cuts. They might be too tight, so they will continue going down. But they don't know where that neutral rate is. It was unusual that Bostic and Harker told me 3%, but most other Fed officials won't put a number on it. But it's a reasonable assumption that they could get down that low. What they won't do is go back to zero unless there's a crisis.
Hey, Tracy, come back in here, because what is positioning telling us in the stock market as far as when you're looking at the S&P 500, just a whisker away actually from its all-time high, but when you're looking at, say, derivatives markets, what does that show us as far as what investors are betting on the next couple of months or so?
You know, I think when you look at the performance of the S&P, there's a couple of things to notice, and you see this positioning more broadly. The market has been led this year up until recently by those big mega cap concentrated names within the index. But really over the past month to 6 weeks or so, that's changed. And you see a much more broad-based lift in the index coming from names outside of just those few names. You also see participation in other market caps and outside the U.S. So it's a much more broad-based participation in financial market assets moving to the upside across the board. The expectation for next year is for much broader earnings growth within the S&P sectors. So not concentrated, again, in just those few names, but spread out more broadly across market caps and sectors. That's great for investors that have diversified portfolios. And that's what we like to see, so that people aren't chasing just a few individual names.
Tracy, what about outside the S&P 500? Geographically, in terms of sectors, where are you looking for growth?
You know, it's looking like international looks a little better this year. It's looking like that broad-based growth is going to show up really more globally, and things not be as concentrated in the United States.
Mike, I want to bring you back in just quickly here, because we still have a few data points on the calendar next week. As you know, like consumer spending obviously includes the Fed's preferred gauge when it comes to inflation with the PC indicator. But what are you most focused on in the short term in the weeks ahead? And obviously the jobs report on September 6th.
Yeah, the jobs report is going to be the chief indicator for the Fed and contribute the most to the debate over 25 or 50 basis points. But we'll also be watching CPI on September 12th, and we'll be watching the PCE numbers that you mentioned, because that's the Fed's official target. If they all come in as anticipated, I think you see 25 basis points on the 18th, and if they don't, it would take a lot to change their view and not cut. You'd have to have a big increase in jobs and a drop in unemployment. But if we see weakness, then that'll put some weight on the 50 side.
Michael McKee, international economics and policy correspondent for Bloomberg News. He's live from the Jackson Hole Economic Symposium in, of course, Jackson Hole. Also, a big thank you to Tracy Bell, Chief Investment Officer at First Horizon Advisors, joining us from Birmingham, Alabama. We do have another headline crossing the Bloomberg terminal. RFK Jr. says he will now support Donald Trump. So if you're keeping track at home, the AP reported that he said in a court filing he plans to endorse Trump. Then a Kennedy aide came out and said that RFK Jr. has not endorsed Trump. And then finally now, RFK Jr. himself saying he will now support Donald Trump.
Switching gears, though, so of course all the chatter today, Tim, as you know, has been all about Jackson Hole, but don't forget about the last of the Mag 7 companies that are going to be reporting earnings next week. Of course, NVIDIA, so the world's largest chip maker here, so investors are getting ready for some potential big swings in the shares, even though we might see volume down in this sort of heading into the Labor Day holiday here. So joining us now, who better than to talk to us than this in the Bloomberg Interactive Broker Studio than our own Esha Day, senior equities reporter and fellow deputy team leader for U.S. stocks here at Bloomberg News. You had a great story for the latest Taking Stock column this morning. Kind of walk us through what the positioning and the options market is thinking when we see some of these big swings that are priced in now for NVIDIA results next week.
Hey, yeah, thanks for having me. Big swings indeed. Options market is telling us that traders are kind of bracing for around 10% move. So, you know, when I checked this number last night, it was around 9%. Last I checked a few minutes back, it was around 10.5%. So people are really looking at big move. And mind you, a 10% move in NVIDIA, that's a $3 trillion market dollar company.
And it's also higher than the longer term average, around like 7.5%.
Which is 7.5%.
Yeah.
Correct. For context for people listening.
That's what I was going to ask. Is a 10% move outside of what is typical?
It is.
Comes to
it is. I mean, it's also true that NVIDIA earnings of late have been pretty volatile. Once, like, you know, last quarter they saw a 9% move. Before that they saw a 16% move. But the quarters before that, the 2 quarters before that, they had very small moves. Longer term average, of course, you know, we all know NVIDIA has become this kind of mammoth thing, the most important stock in the market. Right. Arguably, it's a pretty recent thing. So, of course, the 7.5% also reflects the fact that the time when not every eye was on NVIDIA, but right now every eye is on NVIDIA.
It's true. It's like ever since May of 2023 when they had that blockbuster revenue forecast. So how do you square it away whenever you're talking to your sources when we're going into a week, which obviously you have a report like this, so investors expect after the bell Thursday they'll report, but then after the bell Wednesday and then Thursday, obviously that's when you could see that volatility there. But when volume's lower during the summer months, especially heading into Labor Day, what should we expect? Like big swings just on Thursday and everything's kind of dead the other days?
I mean, see, it's like it's part of the game, right? Like this is going to be a week where volumes will be pretty low, so that will also magnify any move. So the 10.5% move that people are bracing for right now, that kind of reflects that fact.
Is there a concern that a big move to the upside or downside could affect other stocks significantly in the AI space when we hear from NVIDIA?
Not just other stocks in the AI space, but the entire market. Like NVIDIA is like it has the second biggest weighting on the S&P 500, right? Just this year, the stock has been like soaring, so up 150% so far.
Its weighting is close to 7%, so just behind Apple.
Just behind Apple.
Yeah.
So this year, NVIDIA's gains contributed to nearly 27% of S&P's gains. So you can understand, like, if there's a big
quarter.
Yes, exactly. Yeah. So there was numbers. Strategists from Citi are saying that if NVIDIA moves 10%, that could mean like a 0.6% move for the S&P 500 index. So you can imagine this is going to ripple through the entire markets and definitely will mean a big move for all kind of AI names, all tech names.
Chip companies.
Only have like 15 seconds left with you. What's the most important metric for our audience to keep an eye on when it comes to NVIDIA?
Profit and revenue. They have been beating profit estimates for 6 straight quarters now. So, expectations are like super high, but I mean, they have been beating them. So keep an eye.
All about managing expectations. Esha Day, senior equities reporter, deputy team leader of U.S. stocks at Bloomberg News. She joins us here in the Bloomberg Interactive Brokers studio. Speaking of stocks, we're seeing green across the screen. The S&P 500 up a full percentage point right now, while the NASDAQ 100 NASDAQ Composite up by 1.3%. Coming up next on Bloomberg Business Week, we're going to be joined by the president and CEO of CleanSpark, the publicly held Bitcoin mining company. That's next on Business Week.
It's 3:21 on Wall Street. I'm Amy Morris. Federal Reserve Bank of Chicago President Austin Goolsbee says it's time to pay more attention to the employment side of the central bank's dual mandate now that inflation is cooling toward the 2% target. Goolsbee spoke on the sidelines of the Fed's annual policy conference in Jackson Hole, Wyoming. And from that conference, we have seen some movement in the markets as we check them all day long for you here at Bloomberg. S&P 500 now up a full percent, or 57 points. NASDAQ up 1.3%, or 238 points, and the Dow is up more than 1% now at 406 points. The 10-year Treasury yield at 3.8% and the 2-year yield at 3.9%. Economists surveyed by Bloomberg anticipate a sharper slowdown in the labor market. They see the unemployment rate peaking at 4.4% by the end of the year and holding there through mid-2025. New home sales in the U.S. bounced back to the highest level since May of 2023. Buyers taking advantage of lower mortgage rates and more listings to choose from. Contract signings on new single-family homes increased 10.6% last month to a 739,000 annual rate, beating all estimates in a Bloomberg survey of economists. That is a Bloomberg Business Flash. Now back to Bloomberg Business Week with Tim Stenivek and Jess Manton. Jess, I'm sorry. Jess Manton.
Thank you, Nancy. We appreciate it.
No, Amy.
Was it Amy?
It's Amy.
Oh, no.
See, you guys, this is what happens.
That worked out beautifully, didn't it?
It did. She didn't do that on purpose,
I really
Amy,
didn't do it on
promise.
purpose.
This is what happens. We need Amy
A
to move to
producer
New
told me
York.
it was Nancy.
Move to New York and be in the studio.
Yes.
Right
That's
now.
right.
Be
I'll
that
be right
as it
there.
may, though, attention New England listeners here. Bloomberg 106.1 and 1330 are moving to 92.9 FM starting September 3rd. Listen to Bloomberg Radio in and around Boston on 92.9 FM. It's your new source for business news from the financial center of New England. Bloomberg Radio moving to 92.9 FM the day after Labor Day, guys.
Okay, some news in the crypto world. It's been a month since the much anticipated Ether ETFs launched in the U.S. Investors don't seem that interested, though. The 9 exchange-traded funds that hold the second largest cryptocurrency directly saw investor outflows Thursday for a 6th consecutive day. It's the longest streak of withdrawals since their debut back on July 23rd. During the same period, U.S. ETFs holding Bitcoin saw inflows daily. This is according to data compiled by Bloomberg. We've got with us the president and CEO of the publicly held Bitcoin mining company CleanSpark. Zach Bradford is back with us. CleanSpark has a $3.2 billion market cap, up around 15% so far this year. Zach joins us from Henderson, Nevada. Zach, good to have you back with us. Hey, I want to get your thoughts on why we're seeing sort of less interest in these Ether ETFs than we saw and are seeing with the Bitcoin ETFs. Why do you see this?
You know, I may be a little biased, of course, as a Bitcoin miner, but, you know, I think it's because of, you know, Bitcoin, I believe, is the currency of the future. It's decentralized. It has all the benefits that come with that. You know, Ethereum I see as, instead of a currency, I see as a platform. So its value comes down to, you know, how people use it as a platform and all the things that get built on top of it. Whereas Bitcoin has a different sort of intrinsic value with the energy that backs it. And I think that's much more interesting to investors, of course, on a biased opinion.
Yeah, I was going to say, you know, again, you know, full disclosure, you run a Bitcoin mining company, but it's still interested to get your thoughts on it. You follow the entire industry. Hey, speaking of Bitcoin miners, there was a lot of concern with the halving a few months ago that it would really affect the business of miners. Talk a little bit about how it has affected or has not affected your business and how you're moving forward.
Yeah, the halving, it occurs every 4 years where the rewards that we earn as miners are cut in half. And it did have a big impact on the, you know, entire industry. And I think what it showed is it showed the miners that prepared and were ready for the halving to occur. And, you know, the best way to be ready for the halving was to have a highly energy efficient data centers and energy efficient servers. So on our side, we spent the prior 2 years leading up to it to build the most efficient fleet amongst the public miners, and it served us very well. And I think it's been more painful for those that didn't have the same preparations. And so, you know, as much as we saw revenues go down because of our steps to move forward, we actually only saw revenues decrease by 7%, even though the reward itself, when measured in Bitcoin, was cut in half.
So you were just mentioning also the efficiency when it comes to the fleet and how crucial that is supposed to be. Walk us through what that would really mean when it comes to more Bitcoin and how it could be mined with less energy.
Yeah, our largest cost input is the energy that we consume that goes into our servers that ultimately drives the rewards. And so if you think of it, if you have a more energy efficient washer or dryer, you're ultimately drying your clothes with less energy. We think of it in a very simple and similar way, where it's what is the energy input that goes into that server that ultimately costs us money and leads to the outcome on the other side. And so, Moore's law has served us well in the sense that, we're seeing chip efficiencies continually improve. And so we've adopted, these new technologies. So our servers run on the latest generation chips that have been manufactured, and the energy inputs that it ultimately takes, it means it's half the energy that it took to produce the same amount of Bitcoin as 4 years ago. So that's what we've always continued to focus on ourselves, and that's what drives all the costs for all the miners.
Hey, Zach, want to get your thoughts on the election. We're, certainly the DNC front and center for us as it wrapped up last night. Speaking to a lot of our team who was there over the last few days, they were also at the RNC last month. Did you hear anything, or have you heard anything from Kamala Harris's team that would make you think about her in a different way than President Joe Biden when it comes to crypto regulation?
I have not, and I will tell you, I would love to hear something. The industry, I think, is ready to engage. Bitcoin in particular should be nonpartisan. And, that's what it's there for. That's what a decentralized system is there to serve best. And the fact that we're only seeing a lot of outreach and really the commentary around it in a positive way is only coming from one side of the aisle, is making this, I think, for a lot of people, a single voter issue for this corner of the map, of course. And I think it has a big impact for, especially for individuals under the age of 35 is what we're finding. So I haven't heard anything yet. We're waiting, and I would love to hear something from that side of the aisle and also from the Harris camp that would give us some confidence on their view of the industry.
Of course, some context for our listeners here. So former President Donald Trump actually had shifted his stance when it comes to cryptocurrency to win over this new block of voters and mega donors here. So in particular, Zach, when you're thinking about this, what would you need to hear from a potential Harris administration here on the crypto side that you think would be more favorable to people who are obviously investing in that type of industry?
Yeah, I think what we're looking for is basically the call the war off is how it seems. It seems like one side of the aisle, and Elizabeth Warren in particular has spoken up to make it a war on cryptocurrency or war even on Bitcoin. And we'd love to see instead an embrace of the innovation. But I think we need to see more than just lip service, but instead, again, embracing it, bringing it to the other side. Ultimately, if you look at what the industry is asking, the industry isn't asking for any special treatment. It's just not asking to be targeted. What we're ultimately doing is we're all running data centers, and our data centers just are used for a specific purpose. And we want to be treated the same way that, any other large scale data center, whether you're, your Meta or if you're Google, get treated. And I think that neutrality and really a promise for that would be actionable is what the industry needs to see. And it needs to be believable.
Zach, what's the data that you're seeing that shows that crypto is an important issue to voters? Our own Bloomberg opinion team, the editorial has a team has an editorial out today that notes that just 1% of Americans, according to research and analysis from the Federal Reserve from May of 2024, say they used cryptocurrency for payment or money transfer last year.
I think that is an interesting thing to point out as payment or money transfer. I think cryptocurrency is used for a lot more, Bitcoin in particular being a store of value. Even myself, as somebody that's been involved in the industry at quite a lot of depth, I really don't use Bitcoin for anything more than a store of value. I look to other things that are easier to actually use and transact. I think that the data we're looking at on our side is that there's 50 million Americans that have at least some exposure to cryptocurrency as an investment rather than as a transactable value. You think about it, it's our retail storefronts may not be ready to accept and transact, but there's a lot of people that are invested in this space.
Do you think they'll ever be ready to transact and accept?
I think they will. One thing that we track a statistic on is about 80% of transactions right now on the Bitcoin network that are used to transact actually occur in Africa. So you think about what our industry is built on versus what their industries are built on. They need it because they have a devalued currency and they don't have access to traditional banking. So I think it'll be much slower here in the US because we have so many other options that are just easier and already built into the systems. But there are places in the world that are already using and transacting in Bitcoin at a much higher scale than we're seeing in the US.
People have talked about how there's that clearly defined maximum when it comes to the supply of 21 million coins here when it comes to Bitcoin. How does that factor into it when, if you're trying to have more people invest in this, but then there's limited supply, obviously there's other types of coins. How do you rectify that?
You know, that's actually one of the reasons I think that Bitcoin has its intrinsic value is it's, you know, anti-inflationary on a long-term basis. You know what it's going to be. There is no risk of, you know, another 20 million coins popping up. And you compare that to how the Federal Reserve operates, and that's where, you know, people that believe in Bitcoin, like myself, see it as a long-term store of value. The more money we print and the more we devalue the US dollar on a long-term basis, it actually builds on the thesis that Bitcoin can, again, on a long-term basis, will hold its value longer because it's not being diluted in the same way.
Hey, Zach, as I mentioned, CleanSpark shares higher today by 6.4% as we speak. On a day like today, I'll be honest with you, I was looking as I was preparing for this. I couldn't find any stories about why the stock was surging today, but it actually puts you guys up around 15% year to date, quite a bit higher than yesterday. Why do you see in your world the stock moving higher today?
You know, I think it's been the foundation we've laid. We've been the fastest growing Bitcoin miner year to date. We've actually doubled our production since January of this year, and we're on track to, you know, double it again. But really, if you point it on a daily basis, you know, Bitcoin is up because of the comments from the Fed today. And, you know, being generally seen as a risk-on asset, I think that the confidence that came in from those statements about how they're going to view rate cuts and things like that added a little bit of life into Bitcoin today, where we saw it go up, you know, a few thousand. And I think that's largely what's behind the Bitcoin miners today. But as it relates to us, you know, we've had a great year and have a great year ahead of us.
All right, Zach, we're going to have to leave it there. Thanks so much for joining us. Always great when you come on our program. That's Zach Bradford. He is the president and CEO of the publicly held Bitcoin mining company, CleanSpark, joining us from Nevada. Hey, let's take a look at where markets are just in the last 25 minutes of trading on this Friday. We're continuing to see the S&P 500 march higher, up by a little more than 1%. The NASDAQ composite up by 1.4%. The Dow up by a little over 1%. Coming up next on Bloomberg Business Week, we're going to drive to the close. We got Louis Navalier, founder, chairman, and CIO at Navalier & Associates, joining us in just a few minutes. This is Bloomberg Business Week.
2:40 on Wall Street. I'm Amy Morris, and we're watching Wall Street reaction to Fed Chair Jay Powell's speech at Jackson Hole. Let's get the latest as we head over to the First Word breaking news desk for today's afternoon call. Here's Felice Moranz.
Good afternoon, Amy. Stocks are rallying with Fed Chair Jerome Powell's Jackson Hole speech signaling rate cuts are on the way. Attention's now turning to NVIDIA earnings next week. That stock is up around 4%. Dow Jones, S&P 500, and NASDAQ 100 are all up about 1%, with the U.S. 10-year yield around 3.8%. The dollar fell to the lowest since January. The KBW Regional Bank Index was up more than 6%. That's the most since November. All of the 11 main S&P sectors are in the green, led by real estate and consumer discretionary. Consumer staples and utilities are lagging. Leaders in the S&P 500 include builders FirstSource, cruise companies Carnival and Norwegian, and Ross Stores, after better than expected earnings. Intuit is the worst performer after disappointing results. Micron and McKesson are also among top decliners. In other news, Apple plans a September 10th debut for new iPhones, AirPods, and watches. Tesla's steep price cuts are helping the used EV market, and RFK Jr. dropped out of the race and says he's supporting Donald Trump. Live from the First Word breaking news desk, I'm Felice Moranz. Amy?
All right, thank you, Felice. And you can hear live breaking news over your Bloomberg terminal. Just type SQUA on your Bloomberg terminal. That's a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
Jess Mitten and Tim Stenovic here in the Bloomberg Interactive Broker Studio. I'm filling in for the great Carol Massar this afternoon. With just under 20 minutes left to go, though, before the closing bell, Tim, we have the S&P 500 actually up more than 1% on the week. The NASDAQ 100 up about 1%, obviously boosted by these gains that we saw on the back of Fed Chair Jerome Powell and his speech earlier this morning. Obviously, him stating that this was the time to come for the central bank to cut its key policy rate and affirming those expectations that officials will begin lowering those borrowing costs soon, and clearly traders betting on as soon as next month, though. But who better to come in, and it's time for that drive to the close here. And back with us is Louis Navellier, founder, chairman, and CIO of Navellier Associates, joining us from Florida. It's always great to pick your brains, especially on a day like this, Louis, when we finally had this clear indication. But it seems like when you're thinking about the debate of 25 basis points versus 50 in September, I mean, with the clear takeaway here, because I don't think traders, at least when I was speaking them ahead of this, they thought that Powell would be just as specific and clear in the indications here. But what's your kind of big takeaways from this, and obviously the reaction overall in the U.S. equity markets?
Well, we're definitely going to get more than one cut, that's for sure. I would definitely do 50, but that signals a sign that the Fed got behind the curve. But it's obvious they're behind the curve based on market rates. So I think the most important thing that will happen on September 18th, other than the FOMC statement, is the dot plot. We'll get an updated dot plot, and we'll know exactly what the Fed's intending. But, they're going to cut on the 18th, 2 days after the election in November, and on December meeting, I expect at least three 25 basis point cuts. And hopefully it works and stimulates the economy. That Canadian rail strike is going to screw up our economy.
Talk about that.
Yeah, it's a big deal. And it's going to disrupt commerce immensely because of NAFTA, we got a free-flowing border between us and Canada. And right now, Atlanta Fed's at 2% GDP growth. So we're not hitting on all cylinders. And one of the things you heard from Jackson Hole, at least I heard on Bloomberg, was like the Boston Fed president, very worried about unemployment. And of course, we had the big downward revision this week. And so unemployment is now starting to take more priority than inflation. So that means the Fed's got to pick it up and catch up with market rates.
We did hear Jay Powell say that he is more concerned about downside to employment than he is concerned with upside to inflation. Why do you point to the downward revision that was announced by the Labor Department on Wednesday?
Well, because it's big. I mean, it means we created 2 million jobs instead of 2.9 million. And I realized they were trying to reconcile it with the tax records, and maybe some people weren't on the records, maybe some people had 2 jobs, but it's big.
It does,
And,
Louis, it seems like markets ignored that.
they did ignore it because they expected it. And but we had 3.4% employment 15 months ago. We have 4.3 now, and we might be headed closer to 5 if they don't hurry up and do something. So let's start cutting.
How quickly, if and when the Fed cuts, do you think it will transmit to financial markets?
Immediately. I mean, it's a turbo boost for the market. I mean, there's all kinds of sectors of our economy that are suffering. I mean, the problem with studying our consumer is the consumers over 60 are fine. They have homes, they have money in the stock market, the life's wonderful. But everybody under 30 is struggling. So that's the problem. We have this 2-tier economy. And, you know, you've got a lot of problems with credit card debt and, you know, car loans and things like that. And so the Fed might want to address that.
Hey, Louis, when some people in the markets were arguing about, well, if they went 50 basis points in September, that could signal that the economy might be slowing more than they had initially thought, and they were expecting stocks to potentially be pressured by that. But obviously, we had a boost today on it. How do you sort of rectify that? Is it more just the fact that they're willing to step in and be more aggressive to help support the economy in any way?
I think the Fed successfully engineered a soft landing, but if they don't hurry up and cut, that success is going to be a failure. As you know, most of the time they can't engineer a soft landing. So I just think that if they got too far behind the curve, they should do 50. Now that will weaken the dollar, and that they may not want to do that. But you know, it's right now we got still a very firm dollar because we're behind all the other central banks. I mean, we learned from Jackson Hole that Canada, Britain, and the ECB is going to cut again before we do. So they're going to cut twice before we cut.
So, how are you advising clients to position then? What should they buy? What should they sell?
Well, I'm advising clients to chill out just a bit because we're overbought right now, okay?
Okay.
And we might get more overbought next week with NVIDIA's earnings.
So would that indicate to you as we head into September, which, as you know, historically the weakest month of the year, that could maybe, if stocks are overbought at that point, they could be more vulnerable to any sort of sell-off?
Well, let me be crystal clear. So the NVIDIA will, even if they miss, they're going to have good guidance because the Blackwell chip. Then on the 30th, we have the PCE. It's going to be 0.1% or less. So we should rally going to Labor Day weekend. But after Labor Day weekend, we're going to consolidate. A lot of it is tax related because people have to pay their estimated taxes on September 15th. So that kind of drains some capital out of the market. And then, of course, we have the debate. We'll have some clarity after the September 10th debate. And then we'll rally from the 18th and we'll have quarter and window dressing. Quarter and window dressing is where the professional managers buy better stocks and weed them out. But the market is, the breadth and power is getting better. You know, I'm still of the opinion it's the market's led by NVIDIA. We went from the Magnificent 7, the Magnificent 1, and 499 other stocks. And but you know, Lilly, Novo Nordisk. I've got a lot of other stocks that are acting well. Costco's acting well. So it's the market's broadening out, and I have a lot of small cap stocks. But for my small cap investors, I tell them to be patient. Let's wait till after the presidential debate before we buy.
Hey, we only have about 45 seconds left. Presidential debate you mentioned, so you have me thinking politics. How could the presidential race affect markets?
Well, I'll be selling a lot of my energy stocks if Trump's going to get elected because, you know, we're going to have a surplus of crude oil. But I might buy some natural gas stocks because that's severely depressed right now. So LNG companies, natural gas related companies, a lot of that's weather related, you know. I also, I'm not in Florida, I'm in the Sierra Nevada. We're having snow in a couple of days, so that's a good sign. But, you know, that's the big one I'm worried about is just how to do the energy policy. You know, and energy is going to control this election outcome because Pennsylvania is the big state. Yeah. And obviously Biden banned LNG in January and the courts overturned them, and now Kamala's got to mop up that mess. But Western Pennsylvania is Trump.
Louis, we're going to have to leave it there. Louis Navalier, founder, chairman, and CIO at Navalier & Associates. This is Bloomberg.
company news headlines on Bloomberg Radio.
From Bloomberg in Washington, I'm Amy Morris. Investors are getting ready for big swings in the shares of NVIDIA when it reports quarterly earnings next week. Analysts say trading in the options market suggests investors see potential for a 9-point move in either direction. NVIDIA is reporting results after the market close on August 28th. NVIDIA shares today are 4% higher. More self-driving vehicles could be hitting the road. Uber says it plans to offer autonomous General Motors cruise cars to customers next year. Uber shares are about 1% higher. Discount retailer Ross Stores shares are 1.8% higher now after its latest earnings. Bloomberg's Kriti Gupta with that story.
A pretty big good earnings beat, a pretty big forecast beat as well. They're talking as well about improving margins. At least that seems to be where a lot of the analyst commentary is focused in on, and a couple of price upgrades as well.
Bloomberg's Kriti Gupta. Ross rival Burlington stores now 2.9% higher. That off-brand chain reports next week. Workers at one of Canada's two main railways are back to work today. The Teamsters Union says its members from Canadian National Railways took down their picket signs, but the work stoppage continues at Canadian Pacific Kansas City after Canada's Labour Minister stepped in to try to stop the work stoppage. Bloomberg's Brooke Sutherland explains.
I do have to think that maybe there was some inspiration from what happened with the UAW targeting all of the big three Detroit automakers at the same time to be able to really force their hand to get the benefits and the wage increases that they were looking for.
Bloomberg's Brooke Sutherland. And shares of Cava up 20% after the Mediterranean fast casual chain raised its full-year outlook after posting second quarter results that beat expectations. Its new grilled steak offering was popular, and diners added more side orders. Those are the company stories we're following at this hour. I'm Amy Morris, and this is Bloomberg.
This is Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio and Television.
Jess Minton and Tim Stemenik here in the Bloomberg Interactive Broker Studio. I'm filling in, of course, for Carol Masser this afternoon. I wanted to point out, Tim, though, a story off the U.S. equities desk that I work on. So my colleagues Carmen Reinecke and Ishan Chen writing a story about how Daniel Loeb's third point actually failed to beat the S&P 500 last quarter despite holding some of the best performing mega cap technology stocks in its flagship fund. And that was according to a letter today to investors from the fund. So my colleagues pointing out here that its flagship offshore fund actually rose just under 2% in the second quarter. It was up about 1.8%. So it did trail the S&P 500's 4.3% gain on a total return basis, of course, in that same time frame, though. So it's a similar story to the first quarter when the fund also trailed the broader market despite having nearly half of the equity portfolio in companies linked to AI. So when you're looking at this, though, of course, Apple stock, though, it's up about 1% today. AAPL is the ticker symbol on this. Also, that stock's up about 18% year to date. And for a reminder, people, in the first quarter, Apple actually had one of its worst performances relative to the S&P 500. I think it was about its fourth or fifth worst since the dot-com bubble burst. And a lot of that just had to do with different questions about AI. But then also, that stock had a massive turnaround in the second quarter, actually bottomed back in the middle of April, and since then it's been quite on a tear there, so they kind of missed out on that big run.
Well, according to this letter, other names included in the fund are Taiwan Semiconductor, Alphabet, Amazon, Vistra. The fund also added positions in Corpay, ICE, with the parent company of the New York Stock Exchange, and then also the London Stock Exchange Group, Jess.
Yeah, so looking at this, though, when you're thinking about some of the companies obviously missed out on. And so they actually still expect, though, when it comes to third point, that there's going to be volatility to continue through year end. I know that's what everybody's thinking about, especially if you think just mere weeks ago, Tim, when we saw the VIX and intraday trading a spike above 65, though, but now it's back below 20, where it had been hovering since the end of last October through July. So it'll be interesting to see what kind of is in store here. But when you're looking at kind of the positioning data moving forward, they're actually betting on volatility to fade over the next month.
Okay.
And we have key events
This
still,
is why,
right? We have NVIDIA next week. We have a jobs report on September 6th, CPI September 11th, and then we have the Fed decision on September 18th.
Yeah, we got a lot on our calendar. Hey, that coming up next, it's our cross-platform coverage. The closing bell starts now.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close, starts right now.
We're about 2 minutes away from the end of the trading day and week. Scarlett Fu and Alex Steele here. And to take us through the closing bell, we've got a global simulcast. Let's bring in now Carol Massar. No, it's just mentioned.
Surprise.
And Tim Stenovich. And of course, welcome to all of our audiences across Bloomberg Television, Bloomberg Radio, and YouTube audiences. Tim, let me start with you because I look at the major indexes right now, all up at least 1%. The Russell 2000 really stands out with that 3% gain because Jay Powell has moved forth with declaring, as much as he can declare, I guess, that there will be a rate cut in September.
You know what's so surprising to me is seeing the move in small caps because I thought this was priced in. I thought everybody was expecting him to say something like he said today. Did you guys hear any surprises today? I mean, the time has come is sort of the phrase of the moment, but it doesn't seem like, it seems like a lot of investors knew this was coming, yet the market hadn't completely priced it in.
Well, I think what was the surprise there was, especially Bill Dudley had talked about this in an opinion column for Bloomberg earlier, actually last week, and of course former, when you're thinking about the New York Fed there, but he was thinking that the Fed chair wouldn't be as specific in signal as much as he did, and so that's what markets weren't expecting.
Well, I also think that we don't seek or welcome further labor market cooling was pretty clear. It was like our reaction function will be to the labor market, and if it gets worse, we're going to be cutting ASAP. Like that seemed to be sort of a mover there for me.
So what that means for markets is that everyone is now fixated on 2 Fridays from now when the jobs report comes out. And what do you do until then?
We call out that day.
Well, we just spoke to Louis Navalier, who said he's advising clients to just chill until Labor Day.
Also, NVIDIA earnings next week.
That's a long time, guys.
Yeah, it's definitely a long time. All right, there we go. Our scores are settling here for the day on this Friday. We're looking at an S&P closing up. We're settling out, but up by about 1.1%. So we are right around the highs of the session here. We're also looking at the NASDAQ up by 1.5%. The Dow Jones Industrial Average up 1.1%. So we definitely rallied into the close here.
All right, well, taking a look at under the hood of the S&P 500, we did see the vast majority of stocks move higher today. 434 names in the index moved higher. 68 moved lower.
Yeah, it's a pretty broad advance here, and I'm looking at the 11 sector groups, even the 24 industry groups, and look at that, everyone. It's a pesto pie or a spinach pie, however you want to look at it. The only
tomato there.
I know. The only sliver of red there is in household and personal products, and a little bit of maybe software and services, but you're talking about a lot of green there. It's led by, the gains are, that is, real estate investment trust up 2%, consumer discretionary, and tech all gaining at least 1.6%.
Okay, well, you heard Jess say the name NVIDIA because I've got my eye on what happened with NVIDIA today, the best performing stock in the S&P 500 on a point basis today, higher by 4.5%. Keeping an eye on the stock because Wednesday after bell, the company reports earnings. We did have Esha Day on our program a little earlier. She said, she reminded us there could be big implications, of course, for the market, given that it's the second heaviest stock in the S&P 500. It's outsized weighting, of course, and it could move 9% in either direction following the report. That's at least according to Citigroup's equity trading desk. Also, keep an eye on shares of Workday. They moved higher on the day today. They rallied after the company said it would increase profitability over the next 3 years to enable strategic investments, 12.5% to the upside for Workday. The company CEO said it'll save money in part by being selective in hiring and using AI in its call centers and finance departments. Finally, shares of the fast casual chain Cava surging today. The company raised its full-year outlook. It posted second quarter results that beat the average analyst estimates. The latest indication that diners see good value in fast casual restaurant shares surging today. What is that, guys? Is that close to 20% higher?
It's close to 20%,
yeah.
yeah.
Day? Wow. Really,
Huge.
Yeah, okay. That's a lot of, steak bowl? Is that what it is?
Yeah, it's all the things.
Okay.
We talked to the CEO, and he was basically, I'm taking market share from everybody. I mean,
Wow.
I'm summing that up, but yeah.
You tell them to open one near our office because there isn't one yet?
I mean, it's kind of close. You
Okay.
can order in,
They are
Tim, come on
expanding.
now.
They are
expanding.
Yeah.
All right, thanks.
All right, guys, I'll take the decliners. Since I'm wearing red here, I'm going to start off with Intuit. It's obviously, we know it's a tax preparation software company. So if you look at this stock down almost 7%, its worst day since May 24th. Its latest results actually did beat expectations, though the problem here was that it gave a full-year outlook that was strong as viewed, though executives recalibrate here long-term growth expectations. So that's thought to weigh on the stock moving forward here. Another one I'm looking at, Las Vegas Sands down about 1%, worst day since August 14th. What happened here was UBS actually cut the recommendation on the casino operator to neutral. So they did say that the slow recovery and the company's Macau business was what was bringing that down. And then, of course, lastly, Red Robin. So this is a gourmet burgers here, American restaurant chain, down about 8.3%. Worst day since August 9th here. So when you're looking at this, it's EBITDA guidance for the full year missed expectations. This does have a market cap less than $1 billion, and the stock's down actually roughly 65% year to date, guys.
All right, I'm taking a look at the bond market. No surprise, it was a rally across the board. The biggest move really came in the front end. You had yields closing down by about 9 basis points. In the 10-year, you had yields down by about 5 basis points. So you continue to have that bull move into the market, right? If you expect the Fed to go, you're going to see a lot of buying coming into the front end as we're anticipating those lower rates. Now, interestingly enough, usually you might wind up seeing the back end move a little bit differently if you're really worried about growth, but clearly the market seems to have a little more confidence in those rate cuts coming and then helping any sort of growth issues there. And then we're just waiting, guys. We're just going to wait till jobs. I mean, Jay Powell really set us up for that that's going to be the reaction function for them. It's going to be the reaction function then for the market. I appreciate NVIDIA's here next week. Jess won't be here for that, but she promises to be covering it from Europe for us.
That's right.
Really?
I am.
really.
I'm going on vacation. Not sure where yet, guys, but somewhere in
Jess
Europe.
is what you call a last-minute planner.
Yeah, I'm just going to book something tomorrow and hop on a plane.
But she said she's still going to be like tuned into email and stuff for
of
NVIDIA
course.
earnings.
We don't want
just
to miss
saying.
these NVIDIA results. Come on.
Okay,
guys.
that happens on the 28th. We'll bring you those numbers, of course, as soon as we get them. We're also getting inflation data in the coming weeks. Alex, as you mentioned, the jobs report is one to watch. That September Fed meeting happening in the middle part of the month. There's a lot happening in the next few weeks that we're, of course, going to keep an eye on. Also, we're keeping an eye on everything happening out there in Jackson Hole, Wyoming, where we did hear from Federal Reserve Chair Jay Powell a little earlier in the day. We do want to take you back there now, though, because standing by in Jackson Hole, Wyoming, is Michael McKee. It is going to do it for our cross-platform coverage of the market close on Bloomberg TV and radio. Let's take you back to Jackson Hole, though, where we find Michael McKee, international economics and policy correspondent. He's with Esther George, former president and CEO of the Federal Reserve Bank of Kansas City.
Well, thank you very much. And we do have Esther George with us. I guess we'd call you the Kansas City Fed President Emeritus now. But you spent many years, obviously, on the Fed, and you were known as one of the hawks of the Fed board. With Jay Powell's announcement today, are you, as a hawk, satisfied?
So I think the Federal Reserve has been talking for a long time about when is the right point to pivot. And, of course, we heard the chairman say today that point has arrived. And so I expect by September they'll be doing that. I'm not sure I disagree with that. I mean, I think as we look at inflation coming down, the issue was never waiting to get to 2%. It was figuring out the right time when you had a sense that it would sustainably be going back there. So I think starting in September might be a reasonable move.
Austin Goolsbee was with us a little earlier, the Chicago Federal Reserve president. He thinks policy is still pretty tight. Do you think it's tight, or is it sort of affecting the economy slightly? I mean, how much is the Fed affecting things now?
Yeah, you know, was a rapid rise in interest rates that has then been accompanied by an economy that has done pretty well. It's moderated for sure. We've seen that in labor markets. We've seen that in various measures of demand. But I think it would be hard to say this policy is too restrictive or too tight, because you have continued to see consumer spending hold up. You've seen growth hold up. The labor market remains, again, while softening, I think has done pretty well. So that will be the challenge for the FOMC, is to really gauge how far are they from an equilibrium as they go forward.
How far do you think they might be from? Do we have a good idea of what a neutral rate is?
You know, what's been challenging, I think, for me during this time is the characteristics of that shock. And so it was a supply side issue accompanied by strong demand factors coming in there. When those hit at the same time, so as we look to see how things are beginning to moderate, it does raise the question about, are we going back to something that would be a very low rate, or has the world changed? And I think there are probably reasons to think there have been some changes that could keep rates higher. Not as high as they are right now, but certainly I don't think going back to maybe where we were.
What would you want the policy to be in terms of the pace of rate reductions, the size of individual rate reductions?
Well, I think it's a good idea to start in a gradual pace, because I think to do otherwise suggests that there is some urgency, that there's a problem, and it could in fact be that this committee will run into something that says it's time to go faster. I think for now, while they watch to see how inflation continues that downward drift, while they watch to see how the labor market does, it makes sense to move carefully, move slowly as they back away from the current rates.
What about the pace? Would you want, do you think that the conditions justify a move at every meeting, or should they skip meetings to see what's happening in the economy? How would you time it out?
Well, I think they're going to have to, again, as everyone says, they're going to get more data between now and the time of their meeting. And I think as they put all that together, judging whether they feel like they need to make a series of moves, and that might make sense to do that. One move and then stopping probably isn't going to tell you much. So just as they had to move quickly with rate hikes, I think they could go slower, but they may have to continue a pace and then pause at some point after they've done a few of those.
Well, you're still active in the Kansas City business community. What do you hear from people there? Are they, the companies, they're optimistic about what's going on right now? Are they pessimistic? Are they somewhat neutral?
Yeah, I think businesses have been by and large optimistic. In fact, many of the surveys that I continue to watch from the Kansas City Fed that do a 6-month outlook continue to show optimism there. So while they're not having the same kind of troubles hiring, they also haven't had to lay people off, and their sales have been good so far. So I don't think those are the nature of their concerns right now. I think
so they're not
feel pretty good.
They're not thinking they might have to lay people off. They're not preparing.
I don't hear any of that. I don't hear any.
Well, now that you're no longer a central banker, you're an average American in the middle of the country. What do you hear from average Americans about how monetary policy is affecting them and about how the overall economy, how they feel about it?
Well, things that won't surprise you, Mike. People worry when they're trying to buy a house that the mortgage rate is high, the prices are high, and that complicates things. I still hear a lot of concern about inflation. And remember, for the average person, the inflation issue is not the rate of change that central bankers are looking at. For them, it is the level of prices and watching to see how something is so much more expensive today than it was. And that, of course, feeds into their dissatisfaction about the economy.
One last question, and that's basically about the balance sheet. The Fed had always said that it would stop QT before it cut rates, and now it's going to do both at the same time. Is that going to cause a problem?
Well, we'll see. I think what the committee needs to stick to is the plan they laid out. And the plan was we will get that balance sheet down to a smaller level. We'll continue to make changes to that. So they've already slowed the pace of QT, and I think, again, this will be another aspect of policy that they'll have to monitor as they go forward.
Well, thank you for your thoughts on this, Esther George, the former president of the Federal Reserve Bank of Kansas City. We'll send it back to you. Looks like it might rain here, so we're going to go inside.
All right, that's one way. Yeah, that's perfect timing, Michael McKee. You never know. I got to tell you, Jess, I lived in the mountains of Colorado for 3 years after college.
I love that. I've always,
Yeah,
anytime I've gone to Colorado.
I think
it's
Carol thinks I
beautiful.
talk about it too much, but
No, you know what? It's fine.
you know, those were my glory days. And the thing about summers in the mountains, you do not know when a thunderstorm is going to happen.
Ooh.
Happens
I
very
didn't
quickly.
realize this.
Yeah, very regularly, very quickly. They move through very quickly. But then, 30 minutes after a thunderstorm, you could have beautiful blue skies all over again. So maybe that's what's happening.
Apparently
out
so,
there
but he was able
in
to wrap that
Jackson
up
Hole.
pretty quick to prevent them from getting soaked there.
Yeah, he was. Hey, some good stuff coming from Michael McKee, international economics and policy correspondent. He was out there with Esther George, former president and CEO of the Federal Reserve Bank of Kansas City. Interesting stuff coming out of Jackson Hole all
so
week.
many things.
Yeah. I want you to talk a little bit about what you were saying during the simulcast, because I thought that was really interesting. The idea that we did see a surge in equities today, especially in small caps, because there was something unexpected in what we heard from Jay Powell today?
So in particular, if you want to look underneath the hood of a lot of things that were driving the gains here, you were pointing out small caps, Russell 2000 actually closing up more than 3% higher today. Best day since actually July 16th. So that was in the midst of the big run we saw with small caps last month. Also, unprofitable tech companies at one point were up, and Goldman Sachs has a basket on this, up more than 5%. And the reason this is important to look at that, as well as companies with weaker balance sheets, is because those are the ones that are going to benefit, because unprofitable tech companies do typically hold more debt. Small cap companies also typically hold more debt. So they're the ones that have been most vulnerable when you're thinking about how aggressive this particular rate cycle has been since March 2022 to now. So they're the ones that are going to be benefiting most from this. So you're seeing those corners of the market today kind of lead the charge compared to other ones. So even though it seems when you're looking more broadly at the major indexes of things rally, obviously major indexes notching those weekly gains, it's the ones that were most susceptible to obviously more aggressive policy that benefited today.
Okay, I'm kind of revising what I said about Michael McKee. It's just a little rain. Okay?
It's just a little bit.
It's just a little rain. I don't know if there's lightning. Obviously, you want to get inside, but
Right.
it's just a little rain in the mountains.
He didn't have his hat on that time, I don't think.
Yeah.
Yeah, maybe he should have kept it on for that one to prevent the rain from getting on him.
Hey, we saw also, Jess, the MSCI All Country World Index
Yes.
rise to an intraday record today.
And that's important too, because another one when you're looking at MSCI, but then also, right, when it comes to the equal weight index here. So SPW, if you want to look at that, also up actually more than 1% today. So best day since August 15th. But when people want to talk about the broadening, not just within U.S. markets, but to your point, when you're looking more globally and what that tells us internationally, you're seeing other markets beyond just the U.S. trading at all-time highs here. So that gives you a strong indication of where things can move forward. Obviously, in the shorter term, could be a bumpy path. You were mentioning actually this earlier, because every week until we have the Fed decision, there's going to be a major data point. So NVIDIA earnings next Wednesday. We'll have the jobs report September 6th. There's going to be CPI on September 11th. And then, of course, the Federal Reserve's next interest rate decision on September 18th. But even when you're looking at some of the implied vol for the VIX and other indications over the next month, it's actually come down compared to what we would have seen earlier this month, because of we've talked so much about that. There was that heightened volatility. But now, maybe because there's more reassurance and Powell was a bit more specific here than traders had thought going into this. So now you're seeing some of those expectations for volatility falling, even though there's certain days like NVIDIA earnings where we could see potential bigger swings here.
Okay, so I want to help move things forward a little bit to next week. Durable goods orders we get on Monday. We're also going to get some pretty important data next week, including consumer confidence. That happens at 10 a.m. on Tuesday. On Thursday, we're going to get initial jobless claims, and then we're going to get the second print of second quarter GDP. The Bloomberg consensus is 2.8%. The Bloomberg economics estimate is 2.7%. We'll get pending home sales on Thursday as well. And then on Friday, we'll get personal income and spending, as well as Canada GDP and Michigan sentiment. That's just some of what we're going to get next week. Those are the highlights that I read. And then of course NVIDIA earnings.
Yes.
What is big picture for you? Like, what's the data point to focus on?
Well, this can be volatile, as Mike McKee will point out, but the Atlanta Fed GDP Now model, and this specifically is because as Tim mentioned, we're having the second, it'll be actually the first revision to the second quarter GDP numbers from the government toward the end of next week. So we already saw the first number about a month ago, but the Atlanta Fed GDP Now model specifically for the current third quarter, it's actually around 2%, but we're going to actually have another update on that on Monday, actually. And looking at that, it kind of bounces around because it takes a while for all of that data to start coming through. But still, even if you look at the ECFC function in the terminal, Tim, where you can look at quarterly estimates for GDP as well as annually, it still shows pretty strong growth there. And even with consumer spending, but obviously what we've talked about a lot for that next employment report that we'll get for the month of August here, and what that can kind of indicate to, because I mean, obviously I cover the stock market, talk to traders every day about this stuff. They always look for trends. So potentially maybe July could have been a one-off, but still there's going to be so much focus on that next report. But still, I keep a close eye on what the GDP Now model tells us.
Reminder, you do have another job apart from this one.
That's right. I do have a day job here, but it's always fun being with you guys.
Yeah, we have a good time when you join us. So thanks for joining us today. We're not done because...
No, I hear there's wine coming soon.
Yeah, I don't know about you.
I'm lots lots of fun, though.
But
I
you're
think
going
it'll
on,
be
I do
fun.
know about you. You're going on
Yeah.
vacation next week.
Yes.
Probably no better way to shut off your vacation
Kick off,
a little early.
we're done with Jackson Hole.
Usually we have wine at the end of the day.
So we'll have to be
but
careful
yeah,
because we still have another segment
we do have
after
another segment
that.
after the wine today, so we'll have to enjoy in moderation.
That's
Jess.
right. No, it'll be fun, but a good way to, end the week here with y'all and a little bit of wine. So I'm not going to complain.
Okay, well, I won't either. Hey, taking a look at the equity markets, green across the screen, the S&P 500 finished the day higher by 1.15 percentage points, bringing its year-to-date up to 18%. Coming up next, we're joined by the founder and partner over at Pangea Estates. This is Bloomberg.
On Wall Street, I'm Amy Morris. Federal Reserve Bank of Chicago President Austin Goolsbee says it is time to pay more attention to the employment side of the central bank's dual mandate, now that inflation is cooling toward that 2% target. Goolsbee spoke on the sidelines the Fed's annual policy conference in Jackson Hole, Wyoming. Stocks responded. We bring you closing numbers each day here at Bloomberg. S&P gained 64 points. NASDAQ is 258 points higher. The Dow gained 462 points. The 10-year Treasury yield at 3.79% and the 2-year at 3.9%. Economists surveyed by Bloomberg anticipate a sharper slowdown in the labor market They see unemployment rate peaking at 4.4% by the end of this year, staying there through mid-2025. Apple is planning to hold its biggest product launch event of the year, September 10th. The company will unveil the latest iPhones, watches, and AirPods. Sources say the company is making preparations for that date. It has not been officially announced. Followed by the unveiling on September 20th. Shares of Apple are about 1% higher. That's a Bloomberg Business Flash. Now back to Bloomberg Business Week with Tim Stenovec and Jess Menton.
Broker Studio. Pangea. It's a Greek word that means all the earth. It was used to describe a supercontinent that existed 240 million years ago, made up of all the continents and land masses that are now separate. The name comes from the Greek words pan, which mean all, and Gaia, which mean earth. It'll all make sense as we bring in our next guest. And I know my co-host Carol Masser is very, very sad to be missing this. She talked with one of our guests about a year ago and yes, sampled some wine. I believe she even kept the bottle because the labels alone are gorgeous. Joining us now, back with us, Travis Braithwaite, the founder of Pangea Estates, as well as Pangea Estates partner Michel Roland from the Napa Valley. It's good to have both of you with us. How are you?
Great, thanks.
Thank you.
Yeah, thanks so much for joining us. Talk a little, we have wine guests frequently on Friday, thanks to our producer, Paul Brennan, who knows what we love on a Friday afternoon. But when you think about the market out there, Travis, there's no shortage of wines to choose from. It's an incredibly competitive market. How do you make Pangea wine stick out?
That's true. It is a competitive market. I think our unique selling point is the innovation and the way we've changed what we do. We've changed the norm. We've stepped a little bit away from tradition, and we've created something that's a world first.
I want to bring in Michelle into the conversation too, because Tim was just pointing out our producer Paul Brennan. Paul was giving us the heads up here that on August 28th, so next Wednesday, National Red Wine Day, also conveniently same day as NVIDIA's earnings. So if anybody needs some wine, potentially after those results, there you go.
Maybe it'll be NVIDIA shorts. Who knows?
Right. We'll have to see what happens there. But wanted to point that out though. But Michelle, when it comes to what you do here, give us kind of a background of how y'all got to this point to our listeners who might not know kind of the background of what y'all do here.
We need a long time. That's a long background. No, but in fact, my job is winemaker, and we invent the word flying winemaker just for me, because I was doing wine in so many countries, 22 in all my life, and when I met Travis to do Pangea program, when you are getting old like I am, you need something attractive or new or interesting, and to blend different wine from different country what was for me attractive, because I did so many blends in Bordeaux, in Italy, in Spain, in California, or everywhere in the world, and to do blending between 5 different countries was crazy enough to seduce me, and so that's why I said to Travis, you are the man for the logistic, but I am the man for the blending. And so here we are, and we are very happy.
Well, I want to make sure our viewers and listeners understand exactly what's going on. So correct me if I'm wrong, but the blend of grapes includes grapes from, the blend of wine includes grapes from 5 different countries, Travis, is that right?
Yes, so it's a classic Bordeaux style blend. So Cabernet Franc from South Africa, Petit Verdot from Spain, Malbec from Argentina, Merlot from Bordeaux, France, and Cabernet Sauvignon from Napa Valley in the US.
So it's about 33% Cabernet Sauvignon, 39% Merlot, 19% Malbec, Cabernet Franc 6%, and Petit Verdot 3%?
Yes, on the vintage you have.
Okay, that's the 2016 vintage here.
It changes every year.
Okay, how has it changed in recent years? I mean, and why does it change?
Depends of my humor.
You're the boss. But really, I mean, how do you know? How do you know? Wine takes a long time to make.
Right.
So how do you know what you want in terms of the blend ahead of time?
So we know what we want from the wine itself. We want something harmonious, balanced, powerful, elegant, and with structure. So we kind of go into it knowing the style of wine we want to make, and the blend is made at the time we sit and try each of the varieties. And whatever is standing out, and Michelle is the master of the blend, we create the perfect wine from the components that we have every year.
All right, well, I've got the 2016 red blend in my hand. I'm going to pull a Carol Master. I'm going to do my best Carol Master.
Yes.
And try to pop the cork on the air without spilling it on my... Now I'm very self-conscious. All right, here we go. Here we go. I'm not
We're
a sommelier.
close.
Hold on, ready? Oh.
Perfect.
Okay. I would say the timing, in hindsight, the timing wasn't great. There was a little too much.
The suspense, though.
Yeah, maybe a little too much
set it
suspense.
up well.
But all right, so Jess, you ask a question while I'm going to pour some samples for ourselves because, it's Friday afternoon. We
Yes,
gotta try
thank
this.
you. And then you can pour me one as well. Travis, I wanted to bring you back into the conversation. Talk to us about what's distinctive about each red grape component here.
So with each of the components in the blend, we particularly picked the regions of the world where it's grown because the region and the terroir in each place allows the grape to ripen the best and show itself the best. So what you have in the bottle is a real representation of each of the varieties showing off the best it can.
And Michelle, we'll kind of build on this too, because how are the blending sessions for the 2022 vintage progressing at this point?
Blending
2022.
22.
The one we
every year is almost the same. We have the wine coming. That's very important. What mentioned Travis. But each wine is done to be blended one day in Pangaea. So the Cap Franc is coming from South Africa. We are doing it. Thinking we have to blend one day. Petit Verdot is coming from Spain. We do it for that. Merlot is from France. I'm close to it because I know very well Bordeaux and Merlot in Bordeaux. Malbec from Argentina. So we are making the wine first, and after that we try to put in the same room all the components. We taste. And we try to see in which way we are going to make the blend. That's why I mentioned before, it's variable. We don't have a percentage of each variety the same every year. We can't do that. We are doing the best wine. The best wine, we use the 5 varieties, but we can low or increase some Cabernet Sauvignon, Merlot, Malbec, and we had already since 15 to 21. We had every year different vintages and different percentages of the variety we use, and so today. The day I'm beginning the blend for one particular vintage, I have no idea which is the percentage I can use. I try to do the best, and that's it. And after Travis tell me you are right, you are wrong, but otherwise, no, he's not telling
I've
me
never
very
said
often.
he's wrong.
I do. I want to bring you back into the conversation, Travis. You have a really interesting background. You're from Stellenbosch, which is essentially the Napa Valley of South Africa. It's the Cape Winelands, if anyone's ever been there. Just an absolutely gorgeous area, with fantastic wine. I'm curious how the wine industry globally has changed over your lifetime, specifically with regard to climate change? Because now you find yourself in Northern California where fires are a huge concern. How are you thinking about climate change when it comes to wine production?
I think all around the world, the challenges are actually ensuring that your vineyards can move through periods of extreme climate change. You know, from drought in most of the areas is becoming a bit of an issue. So farming practices have to change, the varieties we plant have to change, and the way we manage vineyards. So I think, for example, in Stellenbosch, it's getting very, very warm. So you know, having the right rootstock to the right clone and managing the process of farming through that process is the hardest challenge we have.
What about when it comes, Travis, to the wine business and how nowadays you are trying to appeal to a different demographic? There's some concern that younger people aren't drinking as much as older generations. Talk a little bit about that.
Yeah, I think that's a concern for the alcohol industry in general. You know, for wine has always been a product that has been enjoyed in the company of food and with friends, and it's a very much a cultural product in a lot of the world. It's something that we grow up with, that we see our parents enjoying, and I think wine can weather the storm and weather these challenges and changes if people are willing to innovate, to try new things, and to appeal to different markets. I think the hardest part for us is to find a way to appeal to a younger generation to enjoy our products in moderation and enjoy them in the right environment, and to sell our product as something that can be enjoyed in that way.
Hey, Michelle, we only have about 30 seconds left, but what comes next for you?
No idea, but I want to say something about the new consumption and the new people. Now the new people before was very traditional consumption. So people was liking Bordeaux, even Napa, Burgundy, Italian or Spanish. But okay, but today the new generation is looking for story, and today the story is very important. So they are looking like they are looking in alcohol, like in wine. And wine, I think we have to find some way to make more fun and to give more fun. And we imagine with Travis to make wine from
fun is a good word to describe the wine industry. We're going to have to leave it there, guys. Pangea Estates partner Michel Roland and Travis Braithwaite, founder of Pangea Estates. This is Bloomberg.
It's 4:40 on Wall Street. I'm Amy Morris. Chicago Fed President Austin Goolsbee says it is time to pay more attention to the employment side of the central bank's dual mandate now that inflation is cooling toward the 2% target.
I think that this reflects the reality of the economy, that we've got to keep our eye on the employment side of the mandate now. This is what the path down to 2% inflation looks like.
Goolsbee spoke with Bloomberg's Michael McKee in Jackson Hole, Wyoming. And Fed Chair Jay Powell says the time has come for the central bank to cut those interest rates, cementing the likelihood that policymakers lower rates at their next meeting in September. Stocks ended the day higher, bond yields fell after Powell signaled the cut and even left the door open for more cuts. And we bring you closing numbers each day here at Bloomberg. The S&P gained 64 points. NASDAQ is 258 points higher. The Dow gained 462 points. 10-year Treasury yield at 3.79%, and the 2-year is at 3.9%. And the world's growing love for instant coffee is keeping roasters reliant on the Robusta variety, once snubbed by coffee snobs. Even as prices reach the highest in about 50 years, consumers are enjoying instant and grab-and-go drinks more than ever after a boost during the pandemic. And that is a Bloomberg Business Flash. Now back to Bloomberg Business Week with Tim Stenovec and Jess Menton.
Thanks, Amy. We appreciate it, Jess Menton. And Tim Stenovec here at the Bloomberg Interactive Broker Studio. I'm filling in for Carol Master, of course, on this afternoon.
Some crayons.
I know, but I'm still finishing the wine from the last segment
That's what
here.
happens on Fridays. You sniff
This
crayons
is
and
what we
drink
do. We're
wine.
having
There's
a good
reason
time.
We're talking about sniffing crayons. Okay.
Yes, there is. It's important because for a lot of companies, this is actually supposed to be a quiet time. Not surprisingly, during the summer doldrums, so many people, including me, are about to be on vacation next week heading into the Labor Day holiday, but not for Crayola. So during July and August, the company's flagship factory in Easton, Pennsylvania, they actually churn out at least 13 million crayons every day, Tim, up more than 8% from the rest of the year. And the reason to prepare for millions of this, and this is happening, is because, probably not surprisingly, I didn't think about this before, back to school season, which its CEO refers to as its Super Bowl. So joining us here, and who better to discuss this than Lily Meyer, Bloomberg News consumer team reporter. She joins us here in the Bloomberg Interactive Brokers Studio. You can also read her latest story on the Bloomberg and on Bloomberg.com/businessweek. So this is such a great story. So many great interactives here. I guess just start off with, how did this story come together, and kind of walk us through this sort of Super Bowl dynamic when it comes to Crayola?
Yeah, so we ended up meeting with Crayola's CEO and had a conversation with him, and then we got to go out and visit the factory over in Easton, and thought it would be really great for our readers to see what the factory looked like, and then also to shed light on this important period for the company.
Okay, well, I got to say, it is the type of piece you need to read on the Bloomberg Terminal or online, because you scroll through it, and the vast majority of the piece is pictures, animations, and videos, and it really takes you into a process that I had no idea how it actually worked. The size, scope, and scale of this thing, Lily, is just incredible. Take us into what exactly is in a Crayola crayon, except I know that you can't get too specific, because you actually don't know the secret formula.
I don't even know the secret formula.
What is this, like Coca-Cola or something?
Wow. Yeah, no, their closely guarded secret is the ingredients of the crayon, but it's a mix of paraffin, a paraffin wax blend, and pigment that goes into all of their crayons.
Okay, and it is a privately held company owned by Hallmark, but the company's actually a century old. I got some good corporate history in this piece, too. Give us some details there.
Yeah, so it was originally Binney and Smith, and the company first made pigments. So they made a black pigment that was used for tires, and then a red paint that was used for barns. And so eventually they transitioned and started making crayons. Crayons at the when they first started making them were not really in schools. They weren't super affordable and not for children. So they kind of were one of the first companies to make them cheaper and make them safe for kids.
It's amazing because in this interactive, you have the elevator here, and anybody on the terminal can look at this. Basically, the corporate entrance being this vivid tangerine color, and then of course there's big crayons standing next to it, so people could kind of get a feel for this. But when I was talking about how, citing in your story, at least 13 million crayons every day that they were churning out. I mean, what is the behind the scenes process or the factory? Walk us through sort of the visuals and how all of this works behind the scenes.
Yeah, so their corporate headquarters, where this elevator is also right next to one of their big factories. So they're in the process of automating a lot of their systems. So there's a mix of machines making crayons and then people who are also helping with the process and making the crayons.
How's business?
Yeah, I mean, I think right
Again,
now...
privately held, so we don't have a ton of information. But what did you gather in your interview with the CEO?
Yeah, that's a great question. So we don't know a ton about how their business is going, but what we do know is this period is really essential for them. So almost half of their annual sales comes during what they call their Super Bowl period, so between July 4th and Labor Day.
I think one thing that really surprised me about this piece, Lily, is that these are still made in Easton, Pennsylvania, and they haven't been shipped overseas at that point. If you were to ask me before I read this, okay, where do you think crayons are made, I would have said overseas. Any insight into how they've been able to keep it in the U.S., how they control costs?
Yeah, that's a good question and maybe something to look more into. I know that their actual process of making crayons hasn't really changed a ton since they started, which is another really interesting part.
And you did mention automation as well.
Yeah.
Jess, I was relieved to see in the piece that although my toddler is not supposed to eat crayons, which she does all the time, they are non-toxic. I don't know what it is with like 18-month-olds and eating crayons.
They're just eating everything.
Yeah. Well, maybe this would be a good time to talk about why we're talking about sniffing crayons too.
Yes, because Bloomberg also had a story about crayons and the sense there in sniffing, and it was actually one of the most popular ones that we saw on the terminal actually earlier this week as well. So when you're looking at this, a lot of companies and what they're doing with this, but also Crayola trademarking, to Tim's point, the smell of crayons. So looking at this, actually this was another story that you did as well, Lily, and basically kind of walking us through the U.S. Patent and Trademark Office and how they issued it. Kind of walk us through the background of the trademark and what the process is to go through this.
Yeah, I mean, one of the things I really noticed when I got to the factory is like you smell the crayon smell, and I'd forgotten what that smells like, but it's such a distinct smell. And
I'm
so
never going to forget it. I smell it.
Yeah. So yeah, they went through the kind of the process of patenting or trademarking actually the scent.
But is it the scent of the wax?
Yeah, so it's the scent. They trademarked the scent of their crayon.
So, but not different crayons don't smell different.
So they're,
Right?
I think they're kind of saying it's the trademark of the specific Crayola crayon. I haven't
But
smelled.
not like different colors.
No. So it's
the
all
universal.
The crayons. Yeah,
We're
yeah,
not
it's
getting to a
universal.
point where they're going to be like scratch and sniff crayons. That's not what the story's about, right?
No, not what this story is about.
Okay.
No, yeah.
That's that's so interesting. So,
Yeah.
I mean, why? How do you do this?
Yeah, so I mean, I think they went through kind of the traditional trademarking process. It took several years. They had to appeal it. And their CEO actually told us that he eventually hopes to kind of pump that scent through the aisles of some of their retailers. So like maybe one day you'll be walking through Walmart and smell crayons is his hope.
A big thank you to CC Charandoff, who reminds me that they actually do have scented crayons already. And CC, one of our producers, she handles the cameras here and does actually everything visually for us. She is from Pennsylvania and went on a school field trip to the Crayola factory. Did you see any students when you were there?
No.
Oh, no, there's no school going on right now. So I
didn't. I didn't, yeah. But some of my colleagues have actually told me they remembered visiting. If they grew up in the area, they remember visiting the factory.
So what's next? Any sort of other surprises that we can glean from Korea?
That's a good question. I mean, they've been doing this for so long. I guess what's next for them is hopefully they're going to start kind of slowing down their back to school period right after Labor Day.
Yeah, so what do they do the rest of the year after the Super Bowl?
Great question. I mean, I think they're still churning out some of their products, but yeah, maybe at a bit of a different rate.
Well, it's a great story. Check it out on the Bloomberg terminal and also at Bloomberg.com. It is written for Bloomberg Business Week, the story by Lily Meyer and Brian Delk. Also, check out their other story. Crayola obtains trademark for signature crayon scent. I got to tell you, this is one of those stories that is just so Bloomberg, so Business Week.
It is.
Answers these questions that you've had probably since you were a kid and just has some great photos, some great videos. A big thank you to Lily Meyer. She is Bloomberg News consumer team reporter joining us here in the Bloomberg Interactive Brokers studio. We're taking a look at how markets closed this afternoon. The S&P 500 finishing the day higher by 1.4 Let's round that up, Jess. 1.5%. The NASDAQ
Yes.
composite. Wait, that was the NASDAQ, excuse me. The NASDAQ up by 1.5. The S&P 500 up by 1.15% today. The year-to-date on the NASDAQ composite up 19%, 18% for the S&P 500. This is Business Week.
company news headlines on Bloomberg Radio.
From Bloomberg in Washington, I'm Amy Morris. Apple is set to host its biggest product launch event of the year, September 10th, when the company unveils the latest iPhones, watches, and AirPods. That's according to people familiar with the situation. They say the unveiling will be followed by the phones going on sale at September 20th. Apple shares now about 1% higher. Investors are getting ready for big swings in the shares of NVIDIA when it reports quarterly earnings next week. Analysts say trading in the options market suggests investors see potential for a 9% move in either direction. NVIDIA is reporting results after the market close August 28th. NVIDIA shares today are 4.5% higher. More self-driving vehicles could be hitting the road. Uber says it plans to offer autonomous General Motors cruise cars to customers next year. Uber shares are 1.4% higher at this hour. Meta has reportedly canceled its high-end mixed reality headset. The information quotes two unnamed workers at Meta who say the company pulled the plug on the device this week after a product review meeting attended by CEO Mark Zuckerberg and other Meta executives. Shares of Meta are now down 0.7%. Intuit shares are down 6.8%. after the tax preparation software company reported fourth quarter results that beat expectations and gave a full year outlook that is seen as strong, But the company also recalibrated its long-term growth expectations. Analysts said that weighed on the stock. And discount retailer Ross stores are 1.8% higher after its latest earnings, as we learned from Bloomberg's Kriti Gupta, who explains that Ross rival Burlington stores shares are also 2.7% higher in its Burlington that will be reporting its earnings next week. Those are company stories we're following this hour. I'm Amy Morris, and this is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio and Television.
It is Bloomberg Business Week. That is Jess Metten. I'm Tim Stenevec, and it is a Friday afternoon. You got a glass of wine?
I do. I'm still.
I got a glass of wine waiting for.
We're waiting for just a couple minutes
room.
left here. Then, well, I'm off next week. Not
so
you,
where are you
though.
going?
So, okay, I was thinking about Spain, Portugal. The only thing is, it's pretty hot right now. There's going to be a lot of people. So I was thinking maybe more Northern Europe.
Can you please shed a little light on your vacation planning process and
Yes.
how you still do not have a destination?
So this happens,
chosen?
as you know, all the time. So like last year, I remember, I think you were on holiday, and so I was filling in for you, and I was with the great Carol Masser, and I was telling her, I think I'm going to go to Greece since I have the next week off, but I hadn't booked it yet, and that was the end of last September. I ended up doing that. Then I also went to the Czech Republic in last November, and I went to Prague.
Did you all plan the last day, basically?
Yeah, exactly, and then Italy in May for my birthday. But
So how do you plan?
So, great question. There's, I have a couple different apps that I use where I kind of gauge what could be the cheapest one. But sometimes if I plan too far in advance, I end up regretting it because I kind of want to bounce around. So I'll do things for a couple of days, and maybe I'll look at things on Expedia or a couple other places. But I usually just have a list, and I tend to go to Europe often. And because of coming out of COVID, we weren't able to travel very easily. So I've been doing that a lot.
Do you remember one of your first vacations after COVID?
Yes.
You got COVID during vacation and you couldn't go.
That's right. I was supposed to actually go to Ireland, wasn't able to go. I forgot about this. This was a couple years ago
for my.
It was back in I think it was 2022.
I
and
saw
so,
you. I said, "How was your vacation?" And you said,
I didn't get to go.
I had COVID.
I
so
did, but I ended up being able to go to Ireland.
We only have a little bit of time. I'm actually
Yes.
very interested in how this process works
Yes.
for you, Jess. What about accommodations?
Yes.
Because that's one thing that I found if you wait to the last minute, you can kind of run out of luck.
So, because I do it solo most times, it's actually a little bit different because a lot of places need to fill things last minute. So if you're going by yourself on kind of a solo trip, sometimes it's a lot easier than if you're with like another person or a couple people, or say like you have kids, like you, for instance,
they're
have a
not
couple
ever
little
going
ones.
anywhere
No, you leave them behind on your holidays.
No, I know. We're just not going anywhere.
Yeah,
It's
so
too
for me,
hard.
if it's a solo thing, it's actually because if it's a last minute thing, there's times where you can find better deals that people don't always realize. Sometimes it takes a little bit of work, but sometimes I'll hop on a plane and I'm like, well, I got 9 hours on this plane to figure out the accommodations, so
You're
I'll
like
figure it out.
You're like a secret travel hacker.
Yes, exactly.
You know, there are all those websites and influencers. You should have like a TikTok account or like.
I
an
should
Instagram
really
account
do
that
this.
does,
Do like a side hustle.
Yeah,
you know,
definitely.
if this gig doesn't work out with the markets here, then I could have like a travel blog or something like that.
Hey, so you said things that don't work out. I'm going to the most read in the last hour
Yes.
on the Bloomberg terminal, and why not end the day with a little real estate story, courtesy of the Wall Street Journal. This on the Bloomberg terminal, among the most read in the last hour. The headline is they spent $27 million building their dream house. Now it's hitting the auction block. It's a story about the pharmacological entrepreneurs Calvin and Ursula Knowlton. They spent $27 million building one of the largest and most ostentatious homes in their native state of New Jersey. Now they're auctioning it off with a reserve price of just $10 million. I'm reading
Just
from
$10 million.
Catherine Clark's story in the Wall Street Journal.
Wow, no, it's fascinating. And the Journal has a lot of interesting pieces. In full disclosure, I used to work at the Wall Street Journal too. And so I remember their mansion stories that they would put out would get a ton of readership, and people are really interested in those things.
Yeah, this is a fascinating piece. When you have a real estate story such as these, they often do go to the top of the Bloomberg terminal. It's Morristown, New Jersey. It's caps a 7-year-long journey during which the couple discarded their original plans for the site. They faced permitting and construction delays, vastly expanded their ambitions for the more than 40,000 square foot mansion. It's got a chapel, Jess, an English-style pub, a gym, a home theater, a wine grotto, and a golf simulator.
All right, well, all the above, like, sign me up.
You ready?
Sounds great.
Yeah. Pretty incredible stuff. Hey, a big thank you to you, Jess Metten, for filling in for Carol.
Always a pleasure.
I would say you'll be back Monday because Carol's out again, but I don't think you will because you'll be on
That's
vacation.
right.
Let us know where you end up going. Katie
Always.
Greifeld is going to be in your stead. A big thank you also to our fantastic team here at Bloomberg Business Week that brings this show together each and every day.